You're looking at a daily chart of the Nasdaq. Welcome to my daily review. I know a lot of people are getting frustrated with this market because it's a chopping mess and it's just going sideways. This is the last week of the first quarter. And, we're a couple weeks away from earnings, and we have the Fed behind us. So there's not a lot of data and a lot of not much moving this market. We had this nice run, from January to February 2nd, gave half of it back. Made that low there of 10,982 and had a nice run back up. And now it's just kind of, it's in this choppy sideways mess. And if you look at longer term, even back to last May, 11,000 has just been kind of a place where it was just been kind of chopping around here. The market cannot sustain any momentum, and it has, in its defense, it's been, thrown a lot with the war and, everybody talking about a recession, the inverted yield curve, and we have the banks imploding, and Nasdaq's still hanging in there. So there's something to be said for that. It can't be driven down, but there's no momentum to take it up. And so it becomes quite frustrating. That's why I need to trade technically and not based on, emotion or, if you see a stock going up and you want to chase it, it always comes back to burn you because there's no stocks that are really making a lot of momentum and sustained gains these days. I want to take a look at a couple stocks here that move the Nasdaq. This is Apple. Of course, the Nasdaq's been down the last couple of days, and Apple's down the last couple of days. Just traded down to the 10 EMA, but doing nothing wrong. You're not getting killed here, but it's just a really tough market. Microsoft, this one actually is setting up a little bit. I took a look at this earlier. Nice little base here, flat base, the 11% depth in the base, pulled back to its 10. So maybe Microsoft will make some noise here pretty soon. We'll see. Another stock is Tesla, below the 200 moving average and below the 200 dollar level. It's just really having a hard time getting anywhere. But in its defense, it did have this gain after this like capitulation sell-off last year. Had this nice run to start the year. I mean, 101 to 217. But it's giving some back and just kind of trading sideways. I do believe they'll have some news over the weekend. I want to take a look at retail because I think the numbers are too low for retail. Philip Van Heusen, which is Tommy Hilfiger, Calvin Klein, reported strong earnings and blasted 20% higher today. LULU, after the bell, reported a strong quarter, and they raised 2024 guidance here, and this is up 11% after the bell, so good for LULU. There's just a lot of these retail stocks I think are just going to hammer these earnings because the estimates are too low. This is Deckers with the Hoka and the UGG, very popular shoes. Very strong stock, made a new high today. What's not to like? ELF is another one that made a new high today. But I'm a little concerned with ELF because, it's more than 60% above its 10. There it is, 64% above its 200 simple moving average. And that doesn't, that's not the end of the world. There's no magic number, but I'm afraid that if you're the lucky one that bought over 80 today and it pulls back just to like this 76, you're down, 5% or so on your trade, you're going to sell when you should be buying here on pullback, and then it's going to go up higher. I believe it's going to go to 90 or so, but probably he's going to have some pullbacks in between there. I want to take a look at a couple of other stocks here while I'm at it. NVDA is one that this one traded up above 60% above its 200. Last week, there you see it on Friday, I believe, or Thursday. Yeah, Thursday was 60.1% above its 200, and it promptly sold off the next 3 days. SMCI did the same thing. It got 60.9% above the 200, and it sold off. Like I say, it's not a magic number. It's not a hard and fast rule. ELF could go to 70 or 75% above the 200, but it's just something to be aware of. That's all. I like ELF. I own ELF, but I'm aware of it too, that there's no guarantee that's going to continue its rise. It's one of the strongest stocks in the market. Anyway, enough with retail. I'm going to take a look at the semis because they've sold off the last 3 days. I just talked about NVIDIA coming back in. Here's LSCC pulling back to its 21 EMA. That's Lattice Semiconductor, ALGM, another one that pulled back to the 21. It's been getting support here, but you got to see the bounce. I don't see any bounce yet. So I want to see a bounce out of these. They have to start bouncing pretty soon here. ACLS, this one traded below its 21 EMA, and AEHR has earnings on Thursday, and they've been signing contracts like crazy. This one just traded, just closed a little bit below its 10. So I wouldn't be surprised to see a strong earnings report from that group, from that stock, and have the group come out of that little 3-day pullback here pretty soon. Anyway, we're seeing rotation out of the semis and into oils and finance is moving on headline news. I'm not going to cover that. This is NVO, obviously a strong stock with their, their weight loss drug. They just had a positive trial last week for an oral, instead of injection, you could take it orally. So that stock is really strong and making new highs on a daily basis. What's not to like? This is IRTC. It's a medical services stock, not, but I just like the pattern here, how it's rounding this bottom and trading a little tight, now above the moving averages. So just want to put that one on the radar. And the other one is Regeneron. This one's a beast. Big market cap, 91 billion. This is not a small stock. Broke out of a base, just moving higher. And then there's Vertex with the base on base pattern. I like this stock. It just marches to the beat of a different drum. That's all. An inside day today, so Vertex looks good. It was inside on lower volume, so nothing wrong with that. A couple of the oil stocks, since they're perking up here, this one traded below its 50 and tried to rally above. It's got rejected here at the 50. We could see if it has enough juice to trade through that. Weatherford is another one. It's a oil and gas equipment stock below the 50, so we need to see if that has enough juice to trade through that level as well. Everybody loves Oxy because Warren Buffett's buying, but this to me isn't a downtrend. It's below the 200. Yeah, it traded up to the 50 today, but I don't know. That's not for me. INSW is another one I have on my radar, but it's below the 50 as well. Nice pattern here, but oil fell out with the debacle from Silicon Valley banks and some of these other banks. A couple stocks that I've been watching that they've been on the watch list trading. I'm interested in them trading kind of wildly. This is SMCI. This traded back to its 21 EMA today. This one, yeah, got above its 200 at more than 60% above the 200. Just pulled back immediately here to the 21. So I'm interested on a bounce there. LNTH, this one broke out of a base, and then now it's kind of pulling back here to the 10 EMA. So that one is trading tight. I kind of like the way that one looks as well. Palo Alto Networks, that's the beast in cybersecurity. Great stock, great company. Still, you got to look at the weekly on this one. It's just consolidating in this base and now trading tight like the last 4 or 5 weeks. So like Palo Alto Network as it pulls back to the 10 EMA, just kind of digesting gains there. And then Workday is the last one today. This one's trading tight as well. It's got a base on base pattern, trading real tight. You can see the weekly here, huge sell-off. Now it's starting to recover. Looks pretty good. And I lied. My last one is AGI, a gold stock. If a gold stock is one of your best ideas, then that kind of tells you something, a little bit about the market, doesn't it? This one was on our watch list. It popped up. It's up 5 or 6% from its buy point, and I don't know. Does that say something about our market? Anyway, we never give up.